Firstly, let's get some insight into the involvement that Agri-Vie has in the agricultural sector in Africa.
Good afternoon, Samantha. Agri-Vie is a private equity fund focused on the food and agribusiness sector. As such, we provide risk capital to the growing businesses in the sub-Saharan African region, and as such play a role in facilitating and collaborating funding for businesses in the agribusiness space.
So, of course, you're involved very much and you have a very close eye and a close hand in terms of agri-financing and the access to it. How easy is it for those involved in the sector to access financing from the banks or development finance institutions right now for financing?
I think generally one can say it is very challenging for particularly businesses in the agribusiness space around the African continent. Historically, agribusiness has been very high on the risk calendar as such, and most banks and funding institutions have not really played a very active role. Of recent, with the re-emergence of the food and agribusinesses in Africa, strong growth in commodity prices, increased profitability for food companies and agribusiness in general, has of course created a focus on the sector as a driver for significant economic growth over the next decade or two. So a lot has been said and spoken about funding in the agri space, and there are a couple of initiatives, but it's still extremely challenging for most agribusiness to access funding.
Of course, before we look at the profitability drivers, and we know that Africa has so much arable land that we are yet to exploit, what are the big risks, apart from the fact that there are factors like weather that you can't control, climate change factors, for example? We saw the drought in the Horn of Africa last year and the effect that that had. But what are the factors that the banks and finance institutions so far identify as the key risks when getting involved in this sector?
Well, I think that probably the most significant one is that the sector is dominated by small-scale operators, small-scale farmers that don't have a particularly strong credit record, well, because they've never really accessed formal lines of credit. So there is no credit record, and these are typically relatively small businesses that don't have a strong balance sheet and therefore have very little collateral to offer to funding institutions.
So then what then needs to happen for conditions to be conducive for banks to start lending to, of course, these smaller scale farmers, these subsistence farmers?
Well, I think two things need to happen for Africa to really make a surge forward in food and agribusiness. Is we have to see some form of commercial development, so for small scale farmers moving and becoming larger players, consolidating land, consolidating through either directly or through some kind of cooperative structures to put together the resources and become more meaningful. So I think that's very important. I think the other important factor is that the way that banks assess collateral and lending against cash flow needs to be relooked, in the sense that you cannot apply Western standards of assessing credit when you look at Africa. So I think the funding institutions also need to look at their credit vetting process to make it more in tune with what is actually happening in the agricultural space in Africa.
That being said, of course, that's just the banking position there right now. And of course, there's still private equity players. We know the likes of Citadel is invested in various projects across Africa. You've got all the private equity players that are playing, looking at the sector and seeing the potential. I know PSG Africa has looked into Zambia right now. Are you seeing alternative funders coming to the market?
I think we're definitely noticing an increased activity on an availability of risk capital. There aren't many agricultural dominated private equity funds in this space, but there certainly is growing appetite from the generalist private equity funders to look at agricultural or agribusiness opportunities. So definitely there is growing growth in supply of risk capital. It's at the moment very focused on the larger economies in Africa. It's not across the whole of the subcontinent, so it's very focused on the larger economies and where the larger opportunities are in terms of large tracts of lands, particularly with regard to primary agriculture.
What about the relative attractiveness of investing in agriculture over other sectors like power and energy and, for example, construction, where we've got big infrastructure drives from governments across Africa? We've also got a lot of investors wanting to invest in power given the dire need for power in Africa. So how do you rate the attractiveness of agriculture versus other sectors when it comes to returns?
I think our assessment is that agriculture is certainly one of the most attractive sectors on a potential risk and return matrix looking over the next decade or two. We're well aware of the key drivers of that going forward. Significant opportunity to do further cultivation of land, significant potential to introduce greater form of technological advancement and therefore increase yields and profitability. And then on top of that, we have most of the governments of Africa understand that agriculture is an important catalyst for economic growth. So a lot of funding and focus and policy change impacting on the investment space. So we're very excited about the space, and we think it's an area that really offers very significant return potential.
In terms of foreign governments and their attitude towards the potential of Africa in terms of supplying agricultural exports that they need or imports that, for example, China might need, just looking at record levels of trade between China and Africa last year, $166.3 billion in trade, but only 4% of that was agricultural trade. Do you think that Africa could be developed as an exporter to the likes of China and India, and that could has spillover effects, positive effects for Africa in terms of agriculture?
I think that's definitely a factor that could be a driver. However, I think we're of the view that the immediate need is really to feed Africa. If one looks at the dynamics in Africa, almost the majority of the countries north of South Africa import the majority of their processed food from the rest of the world, which is a situation that is not sustainable. So we see the biggest opportunity is actually import replacement, and to satisfy local demand by adding value to crops is a very significant area. But definitely in the more commodity crops, there is an opportunity to export surplus production at some point in the growth curve.
Well, of course, Standard Chartered was arguing really that it was based on the fact that you have skills transfers, increase in productivity. But we are going to have to leave it at that. Thank you so much for your insight and time. Avril Stassen, investment advisor from Agri-Vie, joining us from our Cape Town studios.